Investing in AI, understanding the future of wealth growth.
The digital air crackles with pronouncements of artificial intelligence. It is omnipresent, lurking in your smartphone, optimizing your commute, and probably even whispering to your refrigerator about optimal snack selection. For many, this technological surge evokes a mixture of awe and confusion, particularly when it comes to money. Is this the dawn of an unprecedented era of wealth? Or simply another overhyped digital mirage designed to separate the unwary from their hard-earned cash? This is not a theoretical discussion for the technorati. This is about your financial future, your ability to discern genuine opportunity from speculative nonsense. If you have ever felt a prickle of unease about being left behind, or a flicker of hope for securing a robust financial legacy, then understand this: the future does not just happen. It is built, often by those who invest wisely in its foundational technologies. We are here to cut through the digital fog. This is not about complex algorithms you will never understand, nor is it about predicting which robot will steal your job first. Instead, we offer a direct, didactic, and unapologetically unfiltered examination of investing in artificial intelligence. We will peel back the layers of hype, expose the true drivers of value, and equip you with the mental toolkit necessary to distinguish between actual innovation and mere buzzwords. Think of this as your personal guide to navigating the AI gold rush, helping you pinpoint the real nuggets of opportunity rather than merely sifting through fool's gold. Your financial acumen is about to get a serious, AI-powered upgrade. So, if you are genuinely committed to understanding how artificial intelligence can reshape your investment portfolio for the better, if you are tired of merely watching from the sidelines as the future unfolds, then prepare to absorb crucial insights. We will detail the key sectors where AI is revolutionizing industries, unveil the top companies poised for significant growth, and arm you with pragmatic strategies to build wealth and avoid common portfolio shredding pitfalls. Do not just skim the surface. Immerse yourself in this complete guide, because while the future might be intelligent, your investment strategy should be even smarter.
Why artificial intelligence is the future of investing, separating hype from reality.
The air crackles with pronouncements of artificial intelligence. One cannot scroll through a newsfeed, attend a business conference, perhaps even order a coffee without encountering the acronym AI. It is everywhere, promising to revolutionize everything from healthcare to how one finds matching socks. For the astute investor, this pervasive chatter presents a critical juncture. Is this genuine, transformative power poised to create unprecedented wealth? Or is it merely another ephemeral bubble inflated by boundless enthusiasm and insufficient scrutiny? This discussion aims to dissect the true investment potential of artificial intelligence, meticulously separating the sensationalist hype from the undeniable profit-generating reality. Understanding this distinction is not merely academic. It is foundational for securing one's financial future in an increasingly automated world. Let us be direct. When one hears artificial intelligence, a common immediate thought drifts towards science fiction. Sentient robots plotting global domination, or perhaps superintelligent beings debating the meaning of existence over a virtual cup of tea. While such fantastical visions make for compelling cinema, they are, for the moment, utterly irrelevant to investment portfolios. The artificial intelligence impacting our world, consequently our financial markets, is far more subtle, far more pragmatic, and frankly far more boring. It is the sophisticated algorithms optimizing logistics, the predictive models enhancing customer service, the neural networks discovering new drug compounds, and the machine learning systems refining manufacturing processes. These are not flashy, world-ending inventions. They are fundamental, efficiency-driving technologies. And fundamental, efficiency-driving technologies tend to generate substantial financial returns for those who recognize their true value. Artificial intelligence, in its current impactful form, is a collection of powerful tools designed to process vast amounts of data, identify patterns, learn from experience, and make decisions or predictions with astounding speed and accuracy. It is already deeply embedded in the fabric of modern life, often without conscious acknowledgement. Consider the content recommendations on streaming platforms, the fraud detection systems safeguarding bank accounts, the personalized advertisements targeting specific consumer behaviors, or the routing optimization for package deliveries. Each of these examples and countless others relies upon sophisticated AI. These applications are not about machines developing consciousness. They are about machines executing specific, complex tasks with an efficiency that human beings simply cannot match. This capacity for enhanced efficiency, improved decision-making, and unprecedented innovation is precisely why artificial intelligence represents a profound shift in the investment landscape. It is not just a trend, it is a fundamental technological paradigm driving economic value across virtually every sector. The future of investing in AI is not a distant prophecy. It is the unfolding present, merely now commanding a more substantial public relations budget. For too long, the narrative around artificial intelligence has been dominated by exaggerated claims and speculative scenarios. This has created a bifurcated perception. Either AI is the solution to all human problems, or it is an existential threat. Neither extreme serves the investor well. A rational approach requires understanding that AI is a tool, albeit an extraordinarily powerful one. Its future value in investment terms will be determined not by its philosophical implications, but by its practical applications and its ability to solve real-world problems more effectively than existing methods. Companies that successfully harness AI to gain competitive advantages, reduce operational costs, or create entirely new products and services are the ones that will thrive. Those that merely affix the AI label to their existing offerings without genuine integration will predictably falter. The distinction between genuine AI-driven growth and marketing-driven bluster is paramount. To truly capitalize on this monumental technological shift, one must pierce through the veil of hyperbole and focus on the tangible. Investing in artificial intelligence is about investing in companies that are building, deploying, or benefiting significantly from these advanced capabilities. It is about recognizing that the future of wealth growth will be inextricably linked to the intelligent automation and optimization that AI provides. Dismissing it as mere hype risks missing a generational opportunity, much like those who once scoffed at the internet's commercial potential. Yet, embracing it blindly, without a discerning eye for actual value creation versus speculative fantasy, is equally perilous. The reality is compelling enough. It requires no embellishment. Thus, the journey into AI investing begins not with fear or unbounded enthusiasm, but with clear-eyed analysis. We stand at a pivotal moment where artificial intelligence is transitioning from a nascent technology to an indispensable component of global commerce and innovation. Understanding this fundamental shift, learning to differentiate between legitimate growth drivers and transient fads, will be the investor's most potent tool. This foundational understanding will pave the way for identifying the key sectors and players that are not just talking about the future, but actively building it.
Key sectors to watch, where AI is revolutionizing industries and creating opportunities.
Having established that artificial intelligence is far more than a futuristic fantasy and is, in fact, a pervasive force shaping the present, the next logical step for any aspiring investor is to pinpoint precisely where this technological tsunami is generating tangible value. One cannot simply invest in AI as a monolithic entity. Rather, successful navigation of this dynamic landscape demands an understanding of the specific sectors where AI is not merely an optional upgrade, but a fundamental transformative engine. This segment will illuminate those critical industries, demonstrating where the revolution is truly unfolding, and how discerning investors can position themselves to capitalize on unprecedented opportunities. We move beyond the general concept of AI to its direct, impactful application in industries ripe for disruption and profound growth. Let us be brutally honest. Some industries are simply better at embracing and monetizing artificial intelligence than others. It is akin to handing a rocket launcher to a skilled soldier versus giving it to a toddler. The potential is there, but the application matters immensely. For the investor, identifying these prime applications is paramount. We are searching for areas where AI acts not as a mere garnish, but as the main course, fundamentally altering operations, creating new markets, or drastically enhancing existing ones. The first, and perhaps least glamorous, but most indispensable sector to consider, is the very bedrock upon which all sophisticated artificial intelligence rests: data and cloud infrastructure. Picture this. AI models are intellectual gluttons. They devour unfathomable quantities of data, demanding immense processing power to learn, analyze, and execute. Without robust infrastructure to collect, store, process, and deliver this data, AI would remain little more than theoretical musings. Therefore, companies providing the literal digital picks and shovels for this new gold rush are enjoying a boom. Think of the chip manufacturers, such as NVIDIA, crafting specialized graphics processing units, GPUs, that are not just for video games, but are the essential engines for AI computations. Consider the hyperscale cloud providers Amazon Web Services, AWS, Microsoft Azure, Google Cloud, which offer the scalable computing power and storage necessary for AI development and deployment. These entities are not merely hosting websites. They are provisioning the digital soil and water that nourish the entire AI ecosystem. Investing here might not grab sensational headlines, but it is a consistent, foundational bet on the continued expansion of AI itself. Who needs glamour when one possesses a reliable and ever-increasing profit stream from the very necessities of the future? Once the foundation is laid, artificial intelligence truly begins to flex its muscles within software and applications. This sector represents the tangible manifestation of AI's power, where raw computational capability is translated into practical solutions across myriad industries. Here, AI is embedded within a diverse range of software products that solve real-world problems, optimize processes, and enhance decision-making. From customer relationship management, CRM systems that predict customer behavior and personalize interactions, to cybersecurity platforms that detect and neutralize threats with machine-like precision, AI is revolutionizing how businesses operate. It is optimizing supply chains, accelerating drug discovery in healthcare, and even making your streaming service eerily good at recommending exactly what you want to watch next. These are not companies selling a futuristic pipe dream. They are delivering demonstrable improvements in efficiency, accuracy, and profitability. Their value proposition is clear. They offer tools that enable other businesses to be smarter, faster, and more competitive. If your business is not using AI-powered software, your competitors likely are, which usually translates into a rather significant competitive disadvantage. Finally, for those who prefer their artificial intelligence with a bit more physical presence, the sector of robotics and automation is undoubtedly captivating. This is where AI moves beyond the digital realm and into the physical world, bringing machines to life to perform tasks that are often dirty, dangerous, dull, or simply demand superhuman precision and endurance. From sophisticated robotic arms and advanced manufacturing plants that build everything, from automobiles to smartphones to autonomous vehicles, that promise to redefine transportation logistics, and even drones that inspect infrastructure or deliver packages, this sector embodies AI's ability to execute complex physical tasks. These companies are building the machines that will increasingly staff our factories, manage our warehouses, and eventually perhaps navigate our roads. While the fear of robots taking human jobs is a popular narrative, the economic reality often points to increased productivity, reduced costs, and the creation of new, more complex roles for human oversight and innovation. The dread of your self-driving car one day critiquing your driving habits is a small price to pay for the efficiency gains offered by such systems. In essence, AI is making businesses smarter, faster, and more capable. The industries that provide its underlying infrastructure develop its pervasive software solutions and deploy its physical manifestations are poised for sustained and significant growth. Investors who meticulously examine these sectors, understanding the genuine utility and market demand for AI solutions within each, are not just chasing a trend. They are intelligently positioning themselves within the most transformative technological shift of our era. Ignoring these pivotal areas is akin to investing in horse-drawn carriages at the dawn of the automobile age. The opportunities are not merely abundant. They are foundational to the future of global commerce.
The AI players. Top companies to invest in and how to evaluate their potential.
Now that we have effectively parsed the often overheated rhetoric surrounding artificial intelligence, recognizing its foundational role rather than its science fiction extremes, the critical question arises: which specific companies are best positioned to ride this AI wave to unprecedented heights? It is insufficient to merely acknowledge that AI is important. One must identify the genuine architects of this revolution, the companies that are not simply whispering AI at every quarterly earnings call, but are truly embedding it into their operational DNA and product offerings. This segment will illuminate the primary types of AI players in the market, and more importantly, provide a robust framework for evaluating their potential, ensuring one does not merely throw darts at a stock market board adorned with shiny AI labels. Let us be forthright. Not all AI companies are created equal. Some are colossal, diversified behemoths wielding AI as another weapon in an already formidable arsenal. Others are nimble, specialized enterprises placing all their strategic chips on a particular facet of AI innovation. Both categories present opportunities, albeit with differing risk profiles and growth trajectories. The savvy investor must discern where their capital is best deployed.
The colossi of innovation, tech giants, and their AI dominance.
The most immediately recognizable AI players are, predictably, the established technology titans. Think of the companies whose logos adorn your devices and whose services permeate your daily existence. Google, Alphabet, Microsoft, Amazon, Apple, and Nvidia. These are not merely dabbling in artificial intelligence. They are aggressively investing billions of dollars annually, hiring the brightest minds, and integrating AI across their vast and varied ecosystems. Google, for example, leverages AI in its search algorithms, its self-driving cars Waymo, its cloud services Google Cloud, in virtually every product it offers. Microsoft is embedding AI into its Office suite, its cloud platform Azure, and even its gaming division. Amazon utilizes AI for its recommendation engines, its voice assistant Alexa, and its formidable logistics network. Apple employs AI for facial recognition, voice commands Siri, and computational photography. Nvidia, though primarily a chip maker, has become an indispensable enabler of AI innovation, with its GPUs powering countless AI models and research initiatives. Investing in these giants offers a certain degree of stability. They possess deep pockets, extensive research capabilities, established customer bases, and diversified revenue streams. They are essentially battleships in the AI ocean, powerful, well-armored, and difficult to sink. While they may not offer the explosive, multi-100% returns of a nascent startup, their consistent, incremental integration of AI across their operations makes them formidable long-term bets. One might view them as the safe bet, if any investment could ever truly be called safe. They are the companies too big to fail, till they are not. But for now, their pervasive influence makes them unavoidable in any serious discussion of AI investing.
The agile disruptors, pure-play AI companies, and specialized innovators.
Beyond the tech giants lie the pure-play AI companies and specialized innovators. These are often smaller, more focused firms entirely dedicated to a particular niche of artificial intelligence. They might be developing cutting-edge AI models for drug discovery, creating advanced robotics for industrial automation, or building specialized AI software for a specific industry like finance or agriculture. These companies often present a higher risk-reward proposition. Their potential for exponential growth is significant should their specific AI innovation achieve widespread adoption. However, they also face intense competition, resource constraints compared to the giants, and the inherent volatility associated with emerging technologies. These are the sleek speedboats of the AI world, fast, agile, and capable of reaching distant shores quickly, but also more susceptible to turbulent waters. Discovering these companies before they become household names is the investor's equivalent of finding a needle in a haystack, albeit a potentially very profitable needle.
Evaluating potential, a framework for discerning investors.
So, how does one distinguish between a genuinely promising AI player and merely a company that has slapped AI onto its corporate description for marketing purposes? A discerning investor must apply a rigorous evaluation framework rather than succumbing to mere enthusiasm. 1. Genuine innovation and technological edge. Does the company possess truly proprietary AI technology? Are they developing foundational models, unique algorithms, or specialized hardware that gives them a significant competitive advantage? Or are they simply integrating off-the-shelf AI solutions? Innovation is not just about being first. It is about being better, harder to replicate, and consistently pushing the boundaries. A company that claims to be using AI but cannot articulate its specific, differentiated application should raise a red flag. 2. Defensible market position. The moat. What protects this company from competitors? Is it their intellectual property patents or unique data sets? Network effects: the more users, the better the AI becomes. Switching costs for customers. A dominant share in a niche market, a moat, as Warren Buffett famously termed it, is crucial for long-term sustainability. Without one, even brilliant AI technology can be quickly commoditized. 3. Sustainable business model and financial health. Does the company have a clear path to profitability? Are they generating revenue from their AI offerings, or are they burning through investor capital with no end in sight? A brilliant AI innovation is meaningless if the company cannot monetize it effectively. Examine revenue growth, profitability margins, cash flow, and debt levels. Avoid companies that rely solely on hype and future promises without demonstrating a sound financial footing. 4. Exceptional management team. Who is steering the ship? Does the leadership team possess a deep understanding of AI, clear vision for its application, and a proven track record of execution? A strong, visionary, and ethical management team is often the difference between success and failure, particularly in a rapidly evolving field like AI. 5. Ethical AI practices and governance. Increasingly, how a company develops and deploys its AI matters. Issues of data privacy, algorithmic bias, and responsible AI usage are becoming paramount. Companies demonstrating a commitment to ethical AI practices are not only building trust, but also mitigating potential regulatory and reputational risks, which can significantly impact long-term value. Ultimately, investing in the AI players requires more than just a passing interest in technology. It demands diligent research, a critical eye, and a healthy dose of skepticism. Do not simply buy a stock because a social media influencer or a hyperbolic news headline has declared it the next big thing. Conduct your own thorough due diligence. The future of wealth growth in AI will belong to those who understand not just what AI can do, but who is doing it well, sustainably, and ethically. Ignoring this rigorous evaluation framework is akin to bringing a spoon to a knife fight.
Growing your wealth with AI, strategies for long-term success and avoiding common pitfalls.
Having dissected the realities of artificial intelligence and identified the key sectors and players driving this technological evolution, the moment of truth arrives for the discerning investor. How does one translate this knowledge into tangible wealth growth? It is one thing to comprehend the landscape. It is quite another to navigate it profitably. This segment is dedicated to forging robust strategies for securing long-term success in AI investing, while simultaneously erecting formidable defenses against the myriad common pitfalls that frequently ensnare eager yet unwary participants. We aim to equip you with the mental tools necessary to transform informed conviction into substantial financial gain, all without succumbing to the siren song of short-term speculation or the emotional whims of the market. Let us commence with an undeniable truth. Investing, particularly in a rapidly advancing domain like artificial intelligence, is not a sprint. It is an ultramarathon. Those seeking instant riches often find themselves simply providing liquidity for those with a more measured, patient approach. The strategies for growing wealth successfully with AI, ironically, less about groundbreaking new tactics and more about applying timeless investment principles to a cutting-edge field.
Foundational strategies for enduring wealth growth.
First and foremost, embrace diversification. This principle is not merely a suggestion. It is a fundamental safeguard for your portfolio. Consider the folly of placing all your prized possessions into a single, exquisitely crafted basket, only to watch it tumble from your grasp. Similarly, staking your entire AI investment thesis on one revolutionary company, no matter how disruptive their AI-powered sentient paperclip might appear, is an invitation to financial anxiety. The market is an unpredictable beast, and even the most promising innovators can stumble, face unforeseen competition, or simply fail to execute. Therefore, spread your investments across a multitude of AI companies. Look across different sectors: the infrastructure providers, the software developers, the robotics specialists. This approach mitigates risk. If one company underperforms, the others can absorb the shock, allowing your overall portfolio to maintain its trajectory. Your financial well-being deserves a robust ecosystem, not a fragile monoculture. Secondly, adopt a long-term horizon. Artificial intelligence is not a fleeting fad. It is a foundational technology poised to reshape industries and economies for decades to come. Consequently, the most significant wealth accumulation from AI investments will accrue to those with the patience to allow these transformative forces to mature. This implies riding out the inevitable market fluctuations, resisting the urge to panic sell during downturns, and ignoring the incessant chatter of daily market noise. Attempting to time the market buying at the precise bottom and selling at the exact top is a fool's errand. It is a game even professional investors rarely win consistently. Instead, commit to holding your well-researched AI investments for several years, understanding that true innovation requires time to yield its full potential. Think of it as planting an oak tree, not expecting a bumper crop of tomatoes next week. Thirdly, implement dollar-cost averaging. This strategy is profoundly simple, yet remarkably effective in volatile markets, which the AI sector can certainly be. Instead of making one large lump sum investment, commit to investing a fixed amount of money at regular intervals, perhaps monthly or quarterly, regardless of the current stock price. When the market prices are low, your fixed sum buys more shares. When prices are high, it buys fewer shares. Over time, this averages out your purchase price, reducing the risk associated with trying to perfectly time your entry point. It automates discipline, removes emotional decision-making, and provides a systematic pathway to build your position in promising AI companies over time. It is the investment equivalent of eating your vegetables. Perhaps not glamorous, but undeniably good for you.
Navigating the minefield, avoiding common pitfalls.
While robust strategies build wealth, awareness of pitfalls prevents its erosion. The AI investment landscape is replete with traps for the unwary. The first and most insidious trap is fear of missing out, FOMO. This emotional trigger is responsible for more poor investment decisions than perhaps any other. You observe a particular AI stock skyrocketing, everyone is talking about it, and the temptation to jump aboard the rapidly accelerating hype train becomes overwhelming. Resist this urge with the full force of your rational faculties. Buying into a stock simply because it has already experienced an astronomical rise, especially based on social media chatter or sensational headlines, is a classic recipe for buying at the peak, only to watch your investment rapidly deflate. Real wealth is built on careful analysis, not on a reactive scramble driven by mass hysteria. The second pitfall is confusing speculation with investment. Treating AI stocks like lottery tickets, hoping for a 1,000% return overnight, is a dangerous delusion. Investment is predicated on fundamental analysis, understanding value, and a long-term view. Speculation is a gamble, driven by short-term price movements and often devoid of any underlying rational basis. While some may achieve fleeting success with speculation, it is an unsustainable path for building enduring wealth. Do not mortgage your future on the hope of hitting an AI jackpot. Finally, guard against ignoring fundamentals. The AI buzzword possesses an almost hypnotic quality, sometimes leading investors to overlook the basic financial health and business model of a company. A revolutionary AI idea, however brilliant, is worthless if the company implementing it possesses crippling debt, an unsustainable burn rate, or an unclear path to profitability. Always scrutinize a company's financials, its competitive landscape, its management team, and its ability to generate sustainable revenue. A great idea with a terrible business model is simply a terrible business model. Do not allow the allure of cutting-edge technology to blind you to the essential metrics of sound financial stewardship. In conclusion, growing your wealth with AI is entirely achievable, but it demands discipline, patience, and a steadfast commitment to proven investment principles. Diversify your holdings, maintain a long-term perspective, and systematically invest over time. Simultaneously, vigilantly avoid the emotional traps of FOMO. Differentiate between genuine investment and reckless speculation. And never, under any circumstances, neglect the fundamental financial health of the companies you choose. By adhering to these strategies and avoiding these common pitfalls, you can confidently position your portfolio to harvest the immense, long-term wealth growth opportunities that artificial intelligence is poised to deliver. Ignore these tenets at your own financial peril.
Getting started with AI investing, a beginner's guide to navigating the market with confidence.
The dazzling promise of artificial intelligence has undoubtedly captured your imagination, perhaps even igniting a fervent desire to participate in this transformative wave of wealth creation. However, for many, the mere thought of actually investing in AI can feel like preparing for an expedition to an alien planet, exhilarating, yet utterly bewildering. Where does one even begin amidst the cacophony of technical jargon, speculative headlines, and self-proclaimed market prophets? Fear not, intrepid novice. This segment is your pragmatic, no-nonsense guide designed to demystify the initial steps of AI investing, equipping you with the foundational knowledge and actionable advice necessary to navigate this burgeoning market with genuine confidence, not just blind hope. We aim to convert your excitement into calculated action, transforming the daunting into the doable. Let us be honest. The world of artificial intelligence can seem like an exclusive club filled with brilliant scientists, coding prodigies, and venture capitalists who speak a language entirely their own. You are likely not developing neural networks in your garage, nor are you evaluating the latest breakthroughs in quantum computing, and that is perfectly acceptable. Successful AI investing for beginners does not require one to become an AI expert. It requires one to become an informed investor in AI. This distinction is crucial.
The indispensable first step: prioritize your education.
The absolute, non-negotiable first step for anyone contemplating entry into the artificial intelligence investment arena is to continue your education. This does not mean enrolling in a computer science degree program unless you genuinely want to, but rather dedicating yourself to understanding the business implications of artificial intelligence. How is it being applied? What problems is it solving? Who are the key players? Relying solely on a single YouTube video or a fleeting social media trend for investment advice is tantamount to asking a squirrel for directions to the nearest fine dining establishment. Amusing, but ultimately unhelpful and potentially disastrous. Seek out reputable financial news sources, read reports from established research firms, and listen to analyses from credible economists and technologists. Understand the difference between machine learning, deep learning, and natural language processing without feeling compelled to code them yourself. Focus on the why and the what rather than the how. Knowledge is not just power here. It is your primary defense against impulsive, emotionally driven decisions that will erode your capital faster than a poorly optimized algorithm. Remember, the market loves informed money, and it absolutely devours ignorant money.
The golden rule for novices: start small, learn much.
Once armed with a foundational understanding, the next critical piece of advice is to start small. This is not an invitation to gamble your retirement savings on the latest AI startup that promises to cure baldness with algorithms. Quite the contrary, begin with an amount of capital you are genuinely comfortable losing. Consider this initial investment as tuition fee in the University of Practical Market Experience. There will be mistakes, there will be learning experiences, and there will be moments when you question your sanity. These are all part of the journey. The psychological benefit of starting small cannot be overstated. It allows you to engage with the market without the crushing anxiety of substantial losses. It provides a runway for learning from minor missteps, refining your investment thesis, and developing your own discerning eye for potential. Success in AI investing is less about hitting a home run on your very first swing and more about consistent base hits over time. Develop your batting average before trying for grand slams. Your future self will thank you for this prudence.
The smart entry point: embrace AI exchange-traded funds, ETFs, and index funds.
For many beginners, the prospect of picking individual AI stocks from a dizzying array of options can be overwhelming. This is where AI exchange-traded funds, ETFs, and index funds emerge as your sensible, strategic ally. Instead of trying to identify the next NVIDIA before it explodes, an AI ETF holds a diversified basket of companies involved in various aspects of artificial intelligence. This could include chip manufacturers, software developers, robotics companies, and data infrastructure providers. The benefits here are manifold. First, you gain instant diversification, significantly reducing the risk associated with a single company's underperformance. If one company stumbles, others in the fund can pick up the slack. Second, you benefit from professional management, as these funds are typically managed by experts who continuously monitor and adjust the holdings based on market trends and performance. Third, they offer a relatively lower risk entry point compared to trying to pick individual winners, which, let us be honest, is a game even seasoned professionals struggle with. AI ETFs are the investing equivalent of ordering a sampler platter. You get a taste of everything without committing to a full entree you might not enjoy. They allow you to gain broad exposure to the AI sector as growth potential without the intense research demands of individual stock selection.
The practical gateway, opening your brokerage account.
All the education and strategic planning in the world are meaningless without the practical means. To execute your investments, this necessitates opening your brokerage account. Choose a reputable online brokerage firm that offers a user-friendly interface, competitive fees, and access to a wide range of investment vehicles, including AI-focused ETFs and individual stocks. Look for platforms that provide educational resources, research tools, and responsive customer support. The process is generally straightforward, requiring identification and bank account linkage. Think of it as opening the door to the digital marketplace, where your AI investment journey truly begins. Do not overcomplicate this step. The goal is simply to establish your financial beachhead. In conclusion, embarking upon the journey of AI investing does not require you to be a tech wizard or a financial guru from day one. It demands a commitment to continuous education, a prudent approach to risk by starting small, and the wisdom to leverage diversified vehicles like AI ETFs for broad market exposure. The market does not reward arrogance, it rewards diligence and patience. By embracing these foundational steps, you can shed the intimidation and replace it with genuine confidence. Remember, the goal is not merely to participate in the AI revolution, but to thrive within it, securing your long-term financial prosperity through informed, strategic action. So, go forth, learn, invest wisely, and watch your confidence and hopefully your wealth grow.
The future does not invest itself. Seize your AI wealth now.
So, you have endured our relentless wisdom, navigated the treacherous waters between AI hype and its profound reality, identified the sectors poised for explosive growth, and learned how to dissect the market's key players. You have even been armed with strategies designed to cultivate long-term wealth, all while sidestepping the common financial pitfalls that ensnare the unwary. This comprehensive journey through the landscape of artificial intelligence investing was not merely an academic exercise. It was a blueprint. It was a direct, albeit sometimes sarcastically delivered, guide to understanding one of the most significant wealth-generating opportunities of our era. The knowledge now rests within your grasp, transforming what once seemed like an impenetrable, futuristic concept into an actionable investment thesis. The choice, therefore, is stark. You may choose to remain a passive observer, nodding sagely at future news reports detailing the immense financial successes of those who acted upon this very information. Or you can elect to wield this newfound understanding as the potent financial tool it is intended to be, actively participating in the wealth creation that artificial intelligence is poised to unleash. Do you wish to be the one who proclaims, "I saw that coming," having done precisely nothing about it? Or the investor whose portfolio quietly reaps the rewards of foresight and diligent action? Your financial destiny, in this context, is not a matter of luck. It is a direct consequence of your willingness to apply informed strategies and avoid reactive, emotional decisions in a market increasingly shaped by intelligent automation. If this unapologetically direct and financially empowering content has resonated with your inner capitalist and has illuminated the path to a more robust financial future, then do not let our hard work go unrewarded by the almighty algorithm. Show your appreciation for truly unfiltered finance by hitting that like button. It costs you nothing, but tells us everything. Subscribe to Finance Unfiltered to ensure you are always ahead of the curve, rather than perpetually attempting to catch up with market trends. Share this video with anyone you believe deserves to understand the nuances of AI investing, particularly those still believing AI is just for self-parking cars. And please, leave a comment below with your own thoughts, or any AI stock you are cautiously optimistic about. We value the collective wisdom, even if it occasionally borders on speculative genius. Your financial future and our analytics will thank you.